Hello, economics students. Hey, early in the semester, I mentioned that we're going to be having a fun little activity, a team activity this year. It's going to last for pretty much the rest of the semester, and that activity is the stock market game, which you will be playing with a group of your peers. Each one of you are going to be given, that is, each group of your peers will be given a pretend amount of $100,000 that you're going to be able to invest in the stock market. So, in order to be able to do this activity, we need to understand the stock market and understand how to purchase stock and what stock even is. So with that in mind, let's get started with an introduction to the stock market game. First of all, we need to start with some definitions. A stock is ownership rights in a corporation. Pretty simple. Well, the obvious question is, well, what's a corporation? A corporation is a business that is owned by stockholders. The stockholders employ others to manage the business for them. So if you own stock in a corporation, you have partial ownership in that corporation. And as an owner, you will then have the ability, along with every other stockholder in that corporation, to choose and vote on who you want to be running that company. And the people that you would be voting on to run the company would be called the board of directors. Okay, we'll get into more on that later on, but you have a right to have a say in who runs the company if you own stock. If a business is not a corporation, it's likely a proprietorship, which is a company that is owned and managed by one person, or a partnership, which is owned and managed by a group of people. A partnership, though, is different than a corporation. When you have a partnership, the partners also run the corporation. And a partnership, ownership in a partnership is not open to the general public. In a corporation, ownership is open to the general public. Anyone can go buy the stock if it's a publicly held corporation. And then the stockholders pick someone to run the corporation, as opposed to a partnership where the partners actually run it. If you own one share of stock in a company with 1 million shares of stock, that means that you would own 1/1,000,000th of that company. So just to keep in mind, most corporations have a whole lot of shares of stock. So if you should buy into a corporation, you would own just a very, very small fraction of that corporation. But still, it is ownership, and that gives you the right to cast votes based on the amount of stock you own on who you would like to be on the board of directors to run that company. Now, how do you buy stock? Stock is traded in a stock exchange. The stock exchange is like the store to buy stock. The most commonly used exchanges in America are the New York Stock Exchange, which is located at number 1 Wall Street in New York City. It's a physical building that you see here in this picture. Stocks are also purchased in an exchange called the CME Group, which is located in downtown Chicago on LaSalle Street. CME stands for Chicago Mercantile Exchange, and you do not buy shares of individual stocks at the CME. What you do there is you buy into a stock index, which is a pool of a whole bunch of stocks, and the value of your investment in that index is reliant on whether or not the overall value of those stocks in that index goes up or down. You could also buy currencies at the CME. So I might choose to buy a whole bunch of euros, for example. And in order to buy a whole bunch of euros, by this I mean millions and millions of dollars potentially, I would go to the CME Group and they would sell me a big bulk amount of euros or other currencies. And commodities. I can buy shares in the wheat harvest, for example. Wheat is a commodity. Oats are a commodity. A lot of your farm products are commodities. A lot of things that are mined from the ground might be considered a commodity, such as iron ore or other metals could be commodities. That's where you go to buy those, the CME Group. And then there's another important index, which is the NASDAQ, which is a virtual stock market. Unlike the New York Stock Exchange and CME Group, NASDAQ is a virtual market. All trading is done online rather than in a physical building. NASDAQ is an acronym. It stands for the National Association of Securities Dealers Automated Quotations. I'm not going to test you on what NASDAQ stands for, but just know that it is an important stock index where all trading is done virtually. Now, what's a stock index? A stock index is a group of stocks whose total value is then averaged out. There are a lot of stock indices, but there are three main ones that you need to be aware of. The Dow Jones Industrial Average is probably the most famous stock index, and it's made of 30 huge international corporations. Okay, and so they have all kinds of algorithms that average out the value of these huge corporations, and that gives you the Dow Jones Industrial Average. There's also an index called the Standard & Poor's 500. We usually just call that the S&P 500, or maybe even just the S&P. But the S&P 500 is composed of 500 large corporations. Okay, these are still big companies, but they're not necessarily the huge companies like are found on the Dow Jones Industrial Average. And then you have the NASDAQ Composite. The NASDAQ is a large index that's weighted heavily towards tech stocks. Has thousands of companies listed on it, but and there are various industries, but tech stocks in particular are found on NASDAQ, and so if tech stocks are doing well, NASDAQ typically does well. So the question is, which of these three indices do you think is the best reflection of the overall stock market? Well, let's think about that. The Dow Jones only has 30 companies on it. NASDAQ has lots and lots of companies on it, but it's heavily weighted towards a single industry, tech. So probably your best index is the S&P 500. If I want to see how the overall American stock markets are doing, S&P 500 is probably my best index to use because it's more companies than on the Dow Jones. It's a more diverse group than is on NASDAQ. So it's a good overall indicator of how the overall stock market is doing in the United States. Now, how do we read a stock quote? We're going to use a website called finance.yahoo.com in this class, and finance.yahoo.com is a site that you will use a lot, and you're going to want to remember that, write it down to give you right now so you can refer to this before you get it memorized. Every publicly traded stock is going to have a ticker. A ticker is a 1 to 4 letter code for a stock. If the code contains anything other than letters, it is not a publicly traded stock. If the ticker has more than 4 letters, it is not a publicly traded stock. So you can have tickers that might have special characters like an and sign or a period or a number sign. Those are tickers, but they are not tickers that are not available to you to buy. A ticker for a publicly traded stock must have only 1 to 4 letters, and it cannot have anything other than letters. You have to know the ticker in order to buy a stock. When you buy your stock, you're going to be purchasing an order using that stock ticker. So make sure you know what the ticker is. And you're going to use finance.yahoo.com to find tickers. So, some tickers are obvious. The ticker for IBM is IBM. It's 1 to 4 letters. In this case, it's 3 letters. It's all letters. There's no special characters. There's no numbers in it. The ticker for General Motors is GM. Again, it falls within that category of 1 to 4 letters, no special characters, no numbers. But some tickers are less obvious. Ford Motor Company, for example, could be F-O-R-D, Ford, 1 to 4 letters, but it isn't. It's just the letter F. In fact, there is another company that has the ticker F-O-R-D, but it's in the financial services industry. It has nothing to do with automobiles. So you need to be careful when you're finding these tickers on companies. What do you think AT&T's ticker is? It might make sense that it's ATT. Well, let's find out. I'm going to move over to a different website here. We're going to go to the finance.yahoo.com website. I'm going to type in here ATT, and you see here that something came up, but it sure isn't AT&T. It's Samsung Electronics Incorporated. Let's go back and look at ATT again when I type that in. Oops. ATT, there's that Samsung. There's something here called AT&T Incorporated, but look at that ticker. That ticker is more than 4 letters, and it also includes special characters and numbers. That is not a ticker that I can buy into. So what's going on? I know AT&T sells stock. Well, remember, what's the name of the company? The name of the company is AT&T. So I'm going to put that little and sign in there. And now look what happens. I have a ticker of T for AT&T Incorporated. If I click on that, this certainly probably looks like the AT&T that you and I all know. It's a big company worth, this market cap is the worth of the company. It's worth $146 billion right now. 44 million shares are sold every single day of AT&T, a big company. That's AT&T, ticker T. Not an obvious ticker. How about Coke? Everyone likes Coca-Cola, right? So let's go back to finance.yahoo.com and see if we can find what Coke's ticker would be. It might be C-O-K-E. I type that in, and if I type in C-O-K-E, I get something called Coca-Cola Consolidated. Let's see what that is. Coca-Cola Consolidated. Maybe this is what I'm interested in. But let's look at some information on this. Notice here, market cap is the value of all the stock. It's $4.7 billion. Remember what AT&T's was? It was $140 some odd billion market cap. So this is a pretty small market cap for a company like Coca-Cola. Look at the average volume of sales here. 46,000 shares a day on average were sold for this Coca-Cola Consolidated. AT&T average volume was in the millions, remember? So I'm a little bit skeptical if this is the Coca-Cola that you and I know, and the fact that it has this word consolidated in it makes me even more skeptical. I'm going to go back and type in Coke. Look what shows up right underneath. The Coca-Cola Company, ticker KO. Let's click on that, see what this is. Coca-Cola Company KO ticker. Look at the market cap. It's $270 billion as I'm typing this. Volume was over 4 million shares a day. This is the real Coca-Cola. It's a big company, lots of activity. So yeah, if I wanted to invest in Coca-Cola, I need to know this ticker, which is KO right there. Not an obvious ticker, but that's the ticker that I want. So as you start investigating stocks, think about how you're going to need to make sure you're looking at the correct ticker. Again, tickers are not always obvious. Sometimes they are. You'll want to dig into this listing on finance.yahoo a little more closely to make sure that the market capitalization, which is the overall value of the stocks, and the volume all are realistic for what that company is. You'll get used to this as we progress through the semester. You'll catch on, I think, pretty quickly with practice. And of course, I will be available for you to ask questions of as we get into this more as well. And with that, I'm going to stop this presentation. This is a good introduction to the stock market. Make sure you understand what an index is, what a corporation is, what stock represents, how you go about buying stock, where you buy stock, that is, where are the exchanges, what are the exchanges called. And with that, I'm going to stop for the day. Check Canvas to see if there's an assignment for you. I'm not sure if there is or not, but what I do know is that I want you to have a great day. We'll talk to you later.